Spotlight, Giverny Capital. Timeless wisdom from 3 decades of value investing. Hello everyone. It's been a while, and my apologies for that. I've been exploring several ideas that I hope will develop into investment hypotheses, and it's taken me some time to understand a few businesses fully. As for now, I hope everyone is doing well. This month, many of us celebrate our Independence Day. For Canada, that is July 1st. So perhaps with the patriotic spirit, I decided to reread the annual letters from a local value investing shop called Giverny Capital. Since this is the first letter in the Spotlight series, let me provide a quick breakdown. A Spotlight piece focuses on timeless takeaways when studying an individual topic. The purpose is not to delve deeply into details, but to take away a few key points that we can apply in our work and life. Anyway, back to Giverny Capital. The firm and the man. A bit about Giverny and its president. For those unfamiliar with the name, with the firm, it operates outside of Montreal, Canada, and manages several portfolios for both domestic and international clients. The firm is run by François Rochon, again, my apologies if I pronounce it wrong, who is a value investor from the school of thought of Warren Buffett and Charlie Munger. I know many of you will ask why we should care about Giverny, so let's quickly review their performance, and for a quick moment, overlook their achievements and philanthropic efforts. To avoid overcomplicating things when measuring the performance of his tenure, we examine his global portfolio, which was incepted in 1993. During the fund's 32-year life, the portfolio has returned an annualized return of 15.1% compared to the S&P's 9.8%, an outperformance of 5.3%. This is truly remarkable and one of the best track records worldwide. To put this into perspective, if you had invested $100,000 in the fund in July 1993 when it was incepted and remained fully invested until his last publication of his annual letter, you would have earned $8,468,925 versus $1,148,589 from the index, a remarkable achievements that we view with huge admiration. Back to François Rochon. He's the president and portfolio manager of Giverny Capital. He earned his education as an engineer at École Pilotique of Montreal and also earned a master's in science. Before working in his respected position, he worked as a research and network engineer. He spent his first 3 years managing family accounts from 1993 to 1996 before being promoted to portfolio manager. Today, the firm manages over $2.71 billion in assets. You may have run into François Rochon as a guest columnist in the Gazette and Les Affaires, as he is a frequent columnist, and may have also heard from him in Andy Claptrick's, apologies for butchering the last name, bibliography of Warren Buffett of Permanent Value, where he's featured for a chapter, or perhaps you've heard of him in his bibliography, sadly available only in France, François Rochon, le précoce seigneur d'un investeur d'exception. The philosophy. François Rochon follows the time-tested principle presented by Benjamin Graham and refined by Warren Buffett, Charlie Munger, Phil Fisher, and Peter Lynch, all of whom are extensively referenced in his letters. The primary goal of Giverny Capital is to build capital through the purchase of equities, where the portfolio manager buys companies at a discount to intrinsic value. Intrinsic value is determined by owner earnings, where an adjustment to owner earnings is made annually, with a stated goal to increase owner earnings every year. Earnings were introduced in Buffett's 1986 letters to shareholders. Other than that, if you had been studying other value investors, a lot of the following principles will sound familiar. Below are some key notions that were extracted from his letters and are followed religiously. Giverny doesn't spend any time predicting optimal selling or buying times, as they believe it is a futile endeavor. They have a firm conviction that the returns are tied to the return of intrinsic value per share, which is interlinked with a company's return on equity. The magic formula for successful business is built on the foundation of high margins, high return on equity, good long-term prospects, and is run by great people. Each investment in the portfolio must have an intrinsic value calculated before purchase. Since the market operates like a casino at certain times, sometimes great businesses will be mispriced. Many companies will need time to realize their value, and the return will not be linear. Another idea is born from the rule of 3. 1 year out of 3, the market will go down by more than 10%. One stock out of 3 that we will buy will sometimes be disappointing. And 1 year out of 3, we will underperform the indexes. We don't like to sell. Like Phil Fisher, we would like to research and buy so well that we never have to sell. Again, many other Buffett-esque principles are demonstrated, but the ones above are the main points I repeatedly and consistently found in all his annual reports. Reading Giverny's letters is like glimpsing into the future we hope to build for ourselves, and it's inspiring to see someone already walking the path and finding success. Key takeaways. I have to say the biggest takeaway from reading all of Giverny's annual letters is that whenever François makes a recommendation in the newspaper and doesn't buy the stock himself, you should drop everything, mortgage your house, sell your car, and go all in. I'm joking, of course, but there were many mentions of mistakes where François would advertise an idea he really liked, but not actually invest in it, only for it to produce extraordinary results. Joking aside, letters are filled with incredible wisdom. François writes with a special wit and humor, keeping the letters both educational and entertaining, with elements that make you feel like you're reading comedy, although sometimes a tragedy. They are recurring ties to the teachings of Warren Buffett, Charlie Munger, Phil Fisher, Peter Lynch, and other value investing luminaries, and how their teachings reinforce certain decisions or help create a model to understand what is happening. For instance, the beauty of the stock markets that we give us and the luxury to avoid sectors and or businesses that are outside of our circle of understanding is another way of paraphrasing Buffett's circle of competence. The other significant takeaway was the extent to which recycled market sentiment occurs and how recurring themes shape markets each decade. For example, over the past couple of years, there has been concern about the potential loss of the US dollar dominance, but I can just look at the 2003 letter, and see that today's cries are an echo of the past. In the 2003 letter, François reuses the strength of the US dollar when Saddam Hussein was captured in December. What were the only things he bought for himself in hiding? American dollars, 750,000 of them. Moreover, Hussein was known not to be pro-American, but when his life was in jeopardy, he made an economical decision over a political one. Another example is the surge of patriotism and protectionism and patriotism that has influenced Canadian politics lately, particularly in the context of the trade war with the United States. Funny enough, this is not the first time the cycle will emerge, and in 2005 letter François wrote, in contrast to some of our co-investors, patriotism is not a fundamental parameter of our analysis. In general, emotions should be let out of investment process. Funny how things repeat. Aside from the recycled recurrent market inflections, what I truly enjoyed was François imagery. For example, the last 30 years have had numerous market panics, and in reflection, the letters have had a theme of the Giverny Capital boat sailing through these harsh waters of recession. Keeping the illustration vivid, when on the other hand prices would become exuberant, the Giverny boat would resist the mermaid's enchanted songs as it sailed by. Perhaps this playfulness comes from François' love for art. Readers of his annual report would notice that each annual report cover features painting by a local artist. Moving on to more of the Buffett-esque ideas that are repeated and reinforced throughout the letters, one of the main principles of Giverny's fund is to disregard current market conditions as they are deemed irrelevant, and François dedicates a significant amount of his energy to convincing his partners of this. When François illustrates this point, brilliant investors that wait for a better moment to purchase shares of companies they like and admire. Bernie Mooney and I know very well a money manager that is truly an outstanding stock picker, but that has been pessimistic about the stock market for 18 years. Had he invested 100% of his portfolio in his favorite stocks and just forgot about the market, he would have done more than 20% annually for more than 3 decades. He builds on these Buffett ideas with, in this line of thinking, to be humble towards the stock market become a supreme advantage. An investor that decides not to try to outsmart the market can, in the end, beat 90% of his colleagues. Given it also borrows ideas from Phil Fisher's advice. Wall Street focuses on a lot of important things, but the quality of the management makes up 90 to 120% of the success of a business. Investors think with such a short-term horizon, but in the end, management is a key factor. I know that many of these quotes that I'm presenting lack context, but I feel that their essence speaks for themselves. While reading, I was not surprised by many of the ideas conveyed in Giverny's letters. However, one did, a knock against cyclicals. François said that in the long run, investing in cyclical stocks can yield at best moderate returns. At this very moment, I don't think I have fully processed this comment, but I did find it quite interesting. François is not one to shy away from bold opinions, as seen in the one above. He's quite vocal with his viewpoints and even manages to make 2 bold predictions that were proven accurate. In a 2011 letter, he accurately predicted the excellent future performance of the next 5 years, checking his predictions 2016, and in 2018 he correctly identified Australian sub 2% 100-year bond as a recipe for losing investors' money. Another takeaway is that the raw emotions conveyed in his letters. I was not invest in for most of François' tenure, and reading his letters, I got a little glimpse. My favorite from the letter was the quote from the GFC. The 2009 letter really put it in perspective. I remember a conference last March where my longtime friend, Bernard Money, attempted to convince a skeptical audience that this was not the time to invest in the market. My apologies, that this is the time to invest in the market. Certain attendees were visibly hostile and shouted that this was the end of capitalism. Wow. The annual reports also include a section that discussed the current portfolio holdings, although limited disclosure has been made since 2017-2018. There isn't much to be gained from understanding why a position was held and the rationale behind continuing to hold it in the portfolio. However, I feel that these takeaways are individual and should be examined by those interested in them independently. I will say this, I found the evolution of Disney's holdings, Pixar's included, to be a great example of a high-level thinking of a high-quality business. The other was the writing of Bank of Ozarks, which brought to mind many things one should consider as a company grows. Speaking of another company, I found it hilarious how timeless the main knock against Google as a business is, that Google is a poor capital allocator. To summarize my main key 8 takeaways, I appreciate the reflection provided in the 2019's annual letter. In the letter, all the crises of the past decades were highlighted. More particularly, the letter highlighted that if you have lived through the 2010s, you would have had to invest through the anti-stock market movement of Occupy Wall Street 2011, the downgrade of Americans' bonds in 2011, financial crisis in Europe, particularly in Greece, also 2011, the debt ceiling crisis in the US government 2012, the fiscal cliff in 2012, the state of the conflict between Russia and Ukraine, 2013. Losses by the United States government against large banks, 2013. Oil price collapse, 2014. Economic slowdown in China, 2015. Brexit, 2016. The trade conflict with China, 2018. At the time, each event created its own ripple events that drove market psychology, and yet the market produced historic returns throughout this decade. So really, if you take anything away from Giverny, it is to follow Buffett's foundation and just to keep your head down. Focus on business quality and economics. The world will keep spinning and your results will follow. Thanks, I'm politely stealing for my letters. I really enjoyed Giverny's letters, and there are a few sections that have been instrumental in bringing me the most value in my learning. The sections that had the most significant impact on me is an idea from Munger's quote, "I like people admitting that they were complete stupid horses' asses. I know I'll perform better if I rub my host's nose in my mistakes. This is a wonderful trick to learn." François transforms this notion into the section called Podium of Errors. Podium of Errors makes an appearance in every annual letter. In this section, François awards a bronze, silver, and gold medal to the mistakes he has made. I think the constant example of his biggest mistakes appearing in the gold medal category, which includes not investing in an idea he understood, his mistakes of omission, or selling too early, makes me think a lot more about looking at components in my portfolio. As I've already mentioned in the letter, I did not invest in the 2010s, and missing these experiences makes it a blind spot in understanding much of the last 20 years. It's one of the things that one thing to read about something and another thing to experience it firsthand. Regardless, what has greatly helped me and gain further understanding of this time was François' Flavor of the Day sections. In these sections, you're getting an unfiltered viewpoint of everything that has influenced the general markets in the past year. Through this, you may gain insight into what the public was worried about, granted on a smaller scale if you had lived through it. The last section was his 5-year postmortem. In the 5-year postmortem, François would self-reflect on his own performance over the past 5 years and adapt his thinking in an area where he had identified mistakes. Having a lot of these insights at the beginning of my investing journey is of great help, even if it's best to experience it yourself. If I managed to leverage this knowledge and expertise of giants, I would avoid doing so many stupid things. Granted, I like these sections so much that I found them so helpful, I plan to steal the idea to use them in my letters. So expect the first 5 years reflection to that 2029 letter, and the addition of the biggest mistakes as well as the flavor of the day, perhaps after different names, in the 2025 annual letter. Conclusions. Well, thank you for reading so far, or in this case, listening. I think it's a massive privilege that so many fund managers now make their annual letters and thoughts public. It creates fertile ground for gaining insight and growing as an investor, and in many letters, even finding life lessons and help us along the way. It was delightful studying Giverny Capital and François Rochon. It was nice knowing that we have a local hero with such an outstanding record. I hope the rest of you enjoyed your time here and gained something from this reflection. If you're interested, I highly recommend going through Giverny Capital's investment letters. You can find them on their websites. Cheers. It's been Daniel. Hope you have a great day.